Now, are there going to be participants? Where are the? How do I understand where are the participants there?
So you have logged in?
Yeah, I've logged in. I'm already there on the video.
Okay. So, wait. Like, there'll be this 2 watching now like that. On the right. Hello?
Yeah, hello.
Yeah, ma'am. Like there are 4 watching now. Like you can see that under the webinar is ready. And if people have questions, they'll put it on the right top chat.
Oh, they'll type it out, is it?
Yeah. You can just give some intro or something.
Okay, I was just trying to see if where are the participants. I can't see the list of participants here.
This is not a Zoom call, like so we can't see like.
I can't see the names of nothing.
Like.
Okay.
This is not a Zoom call.
Okay.
So you just give some intro and let's see like whether we can.
Sure. Okay. So I'll disconnect this one.
Okay.
Okay. Hi. Good evening. This is Dr. Neetika Batra, and I'm sorry we took a little time connecting this technology. I think we took a little bit of time to navigate through, but finally we are here. So glad to be with you all today and to talk about this very interesting area of lending by banks to the priority sector areas of the economy. I think that's the big need of the hour for us all to assess, because on one hand we have these big banks and volumes of money being lent out into the economy, and on the other hand we also have the economy not growing in a manner that we would like it to grow. For instance, the rich are getting richer and the poor are getting poorer is the classic phrase that we use to describe the widening gap in income inequalities in the country, which somewhere puts a very dark spot on the kind of growth that we are talking about. So while we feel very proud of the 7%, 8% GDP growth that we talk about, and our finance minister talks about making it a 5 trillion economy by 2024. So we talk about these numbers and we say that India is one of the fastest growing economies in the world, and we really take pride in that. But the question is that growth equally spread, or are the benefits of that growth going to all the population, all the segments of the population, all the regions of the country in a very equitable manner, in a very fair manner? Or is it that the richer sections only are cornering a big share of this growth and getting richer, and it is not making much difference to the per capita income or the average income level of the poor section in the country? So, for instance, 60% of our population thrives on agriculture in the rural areas. But if you notice that after all these years also, agriculture is only 13% of the GDP of the country. You can just imagine the kind of per capita income people living in those areas must be drawing as compared to the top 5% population, which takes away about at least 85% of the income of the country. So, very wisely speaking, our central bank, RBI, and the government, after nationalization of banks in 1967, put out a policy of saying that that banks should be able to lend 40% of their deposits, the loanable amounts that they have, to the priority areas of the country, which is agriculture, small scale sector, weaker sections, like that. This was to ensure that it is not just that the big industries or the big companies take away all the loans from the banks and the poor farmers, and the small scale sector, which needs that money, is not able to get any attention from the banks because one, they're very small in nature. Secondly, their repaying capacity may be limited, and third, somewhere they don't figure in the radar of the banks because just by their pattern of the occupation they have, and the size they have, and the collaterals they can offer, the administrative hassles which the banks have in lending to small borrowers, all those things become deterrents to lending out. And with the result, what can happen is if they don't have the capital, if they don't have the loans, their growth can get really stunted. And that can lead to a lot of disparity in the country, in the income of different sections in the country. And therefore, government had very wisely put a policy guideline saying that 40% of the money should go to these smaller sections, out of which 18% should go to agriculture, and some 10% should go to the weaker sections, and all those thrust areas of the economy. And banks were mandated to do this by the RBI. Gradually, this was also extended to private sector banks, to the foreign banks, and therefore, the intention of the government has really been very noble in terms of asking the banks to lend out more to these priority areas. Uh, However, if you notice since 1969, 70, when this policy came into place, till today, so almost about half a century away, we still have not been able to make much mark into in the progress of these sectors of the economy. I mean, agriculture is still lagging behind, is still having a low productivity, contributes very low to the GDP. Growth rate is hardly 1.3% per annum, as compared to the services sector, which is really growing very fast. Uh, so the question is that despite so much of capital going into these areas year after year for almost 50 years now, why is it that these sectors are not growing at the pace as they were expected to? Because the large belief is that capital is the main input which can spur growth for any sector. Of course, there are other factors like technology, like the input availability, the labor productivity, and many other things. But largely, everything boils down to the kind of money you can finance these sectors with. So this question kept bothering me because on one hand I would see 40% money going in, on the other hand I would still notice a very slow growth of these sectors, and what bothered me most was the slow growth in the average income level of the large segment of population in our country. So why is it that on one hand we had this amazing per capita income of the top 5% of the country, while people in the rural areas who are working very hard and for area which is the basic need of any country, that is food. Why is it that their per capita was so low? Why is it that the farmers suicide every year has been a issue? Why is it that child malnutrition, is the largest in our country because children are deprived of food and largely because of low income levels of their families? And why is it that SME is the small scale sector, which is the largest employer provider for our country and the largest engine for growth? Uh, is still struggling to get capital, struggling to get finance, and grow at the same level as larger companies are. I mean, if you notice the non-performing assets, the bad debts of rising from large companies is much higher, and still banks queue up to give loans to them, but instead they would not, be as eager to give loans to the small scale sector, which is, like I said, the engine for our economy. So I think some of those questions really bothered me, and therefore I decided to research on this area and find out what is it that is happening in this area. Why is it that despite 40% money going, it's not still going up? Is the money really going, or is it that we're still trying to just comply with the formality on paper, and we are not actually living the spirit of the guideline. So that was the question I had in mind, with which I started my PhD research work about 8 years, 9 years back, and I finished it about 3 years ago. And I think the results were very, very interesting, which came through. Uh, and as usual, I felt that um, while the intention was good on the part of the banks and everybody wanted to comply, there were certain challenges which were being faced by them, genuine challenges which they faced, which was not allowing them to live the true spirit of the guideline. And so my recommendations were on those lines, that if we could uh, enable the banks and equip them better, then maybe we can, make this policy more meaningful for everybody. So that was the gist of my PhD work, my research work. And any questions now, I'll be very happy to take on. Till the time you type the questions there, I can just say that a very interesting alternative to this priority sector lending, or like it's called directed lending in other countries. Very interesting alternative is the microfinance, which has just come up as a model, and so it's on the same lines, where the idea is to provide lending to the weaker sections and the sections which have been neglected so far by the banks, so, or other sources of finance. So that's also coming up in a big way. Of course, there are challenges encountered in that model also. So there's a debate going on whether one should do away with priority sector lending and just shift to the microfinance model, or vice versa, or have a blend of the two happening, where even now banks are allowed to lend a part of this to the microfinance institutions, and then they lend onwards to their own participants. So I think the study is on, the debate is out. Both models have their advantages, disadvantages, but I would say that if one could, work towards strengthening the program, the policy program here, we could get good results. But somewhere, I think my feeling is that government has made the policy, RBI has made the policy, uh, and it is just continuing the way it is without anyone trying to look at the impact it has made, or what kind of changes it deserves now, uh, in the new situation today, that we are in a very different kind of a situation than what we were when this policy was conceived 50 years back. So, in the light of all these changes, does this policy also need some updations? So that's something that we need to still work on. Incidentally, in this study, I also tried to cover, apart from the fact that whether lending was being made to the desired sections of the society as it was intended in the policy. Apart from that, is it also going to the geographic regions in the country which are poorer and need more boost for the development. For instance, the regions of UP, Bihar, Orissa, Madhya Pradesh, Northeast region with its states of Meghalaya, Tripura, all these regions are so-called still backward in the country. And it would really help if priority sector lending is made more to these areas and ensure the development of these areas. Instead, when I did the study on this for the entire 50 years, for the entire, my study period was from 1999 till 2015. So almost 16 years data I had taken. So when I looked at the data of some 28 states and union territories year after year, uh, I noticed that the same states were figuring in the top few ranks and the bottommost ranks for all these years. So which means that states which were getting more priority sector lending kept getting it year after year, and states which didn't get any attention were in the same situation for all these 16 years. And typically, those in the bottom rung were all these poor states, and those in the uppermost rank were all the richer states. So obviously, it was like, the richer states were getting larger share of the priority sector lending than the poorer states. And I also did a regression analysis for both the bank-wise lending as well as the state-wise lending, and just to figure out in the first case what kind of banks were complying more with the PSL guidelines and which were not able to comply so much. And in the second part, I did a regression analysis for the states to find out what kind of states were getting a larger share of the priority sector lending versus the other states. So interestingly, I found out that in terms of the state characteristics, it was the states with higher per capita income, that means the richer states, and states with the higher banking development, which had larger banking reach and banking density, which were getting larger part of the priority sector lending. So it clearly established the fact that richer states were getting a larger share of the priority sector lending, and of course the reasons were both from the side of the banks. I would say the policymakers, whether it is the state or it is the borrowers. So, it was both a push and a pull factor that we were talking about here, because, uh, to some extent, the onus or the responsibility lies on the governments of the states also to ensure that they have enough development projects, they have enough infrastructure uh, projects which are attractive to banks to lend. Now, if they don't have that kind of investor friendly environment or projects which are attractive for lending by banks, it makes it very difficult for banks to put in their money. After all, banks are also commercial organization. They're answerable to the depositors like you and me. It's our money which is in the banks, and the banks are the custodians for that. So they are also responsible for lending it to profitable areas. They can't just simply lend anywhere, and then the whole economy will be in trouble. Um, basically, the onus lies not also on the state governments to ensure that the environment is attractive enough for banks to lend and conducive enough. And likewise, it was also a push factor from the, so that's what we call a pull factor from the states, and also a push factor from the banks, where if they can ensure some lending happens, then it leads to more development in that region, and that development then further calls for more projects and more investments. So what we call a clear, in theory, what we say a finance growth nexus is what we call. So you need some banking development in a region to fuel the growth, financial growth of that region, and vice versa. If there is financial growth in a region, the banks are automatically attracted and the lending happens. So it's like a chicken and egg story, as we say. But somewhere one has to break that vicious circle, and one has to kind of ensure that these regions which are part of the country are also, given equal attention in development. And so that was the second part of my study, and in fact, it got well received by one of the very prominent journals of the World Bank, and they decided, they were very kind enough to accept and publish it also, because it's something which I think it raises a question on the social development part of finance. So it is not just that finance has to look at the profits alone or the returns alone, but if it can go into a social cause and also serve a meaningful purpose for the society, for the nation at large, I think that is where we have a win-win situation, where we are not just looking at money for a very small specific segment of the country, but we are ensuring an inclusive growth, a balanced development for the entire economy. Because ultimately, we're not talking about just fast development. We are talking about a balanced development. We are talking about an equitable development, which is also the priority of the nation. So, priority of the nation is not just to ensure a very fast and large growth of the economy. It is also to ensure that the growth is equitably spread across all the segments, all the regions of the country. And I think with that view, my study aimed to find out what were the reasons, what were the challenges which were coming in this way, and how could we make the whole growth more inclusive. I'm unable to see the questions on the chat window here.
I'll send you on WhatsApp. You can check there.
Okay, I'll just check. Okay. Okay, I'm sorry, I was not able to see the questions on the chat window here. Somewhere it's not showing. So my colleague has just mailed it to me. Has just sent it to me on WhatsApp. I'll try and read it. Sorry, I've got my specs somewhere there. Okay. After the okay. I think very interesting questions you have here. So I'll take it in that order in which it has come. The first question is, what about the GDP growth in the West, and what is the percentage of agriculture in the GDP of US? So I would say that we need not just plainly go by the percentage of agriculture in the GDP of a country. What we need to look at also the per capita income of people there. So, in that sense, it may not just be fair to compare our situation with a country like US, which is a very developed nation. Because what happens is in those countries, the productivity of agriculture is so high that even with a very small share of agriculture in the GDP, it leads to a large income for the number of people employed. So see, the percentage of population employed in agriculture in US is very, very small compared to India. And therefore, even if the contribution to GDP is small, the per capita income of people employed in agriculture there is very high. So the disparity that we notice in India does not exist to that extent in those countries, because if there people, if you're getting income from agriculture, the per capita income is equally high. Because one, like I said, number of people employed is low because of the high agriculture productivity. You don't need as much labor there. It is more capital intensive. It is more geared by technology, which ensures that even if a small segment of population is employed, the output is huge. Number one. Number two, in the developed economies, we say that there are three phases to growth in any economy. Um, you start with the basic subsistence level of primary, secondary, and tertiary is what we call, right? So primary is the agriculture sector, secondary is the industry or the manufacturing sector, and then we come to tertiary, which is the services sector. So when we say as the economy grows or becomes more advanced, you grow from primary to secondary to tertiary. In those countries, primary sector agriculture was developed ages ago, and then we also developed the manufacturing sector, and then we moved on to the tertiary, which are services. So those are largely service oriented economies now, having ensured a good income and a good foundation to the primary and secondary. And that is why the per capita income from primary and secondary is decent enough, and they can afford to have a large segment coming from services, and doesn't result in any inequalities of income there, as much as in developing countries like India, where we seem to have crossed the primary and the secondary development completely and just moved on to the tertiary sector. We had not yet developed our primary sector enough. We have not strengthened our agriculture sector. We have not made the productivity large. We have not been able to ensure a good per capita income for our farmers, that we moved on to the secondary, which was just after our independence. So we started paying attention to the secondary sector, manufacturing sector, and we had not fully developed there. We had not been able to strengthen there also much, when we just simply moved on to the tertiary, the services segment, the BPO part which came in. So I think somewhere we were not able to strengthen the foundation of the economy before we moved on, and therefore we noticed the kind of anomalies that we have here in income disparities. So that's the comparison I think you are talking about with US and India. That was the first question. If I can now move to the second question, it says, "Hello, ma'am. Glad to attend your session again after a few months. Could you please let us know one of the reason why banks couldn't live up to the spirit of guidelines and challenges they're facing?" Okay, so yeah, so I did a mix of a secondary and a primary study. So like I said, from 1999 to 2015, I took the annual data for all 16 years. And this was for about approximately about 30 public sector banks, another 30 of the private sector banks, and some 20 foreign banks. So I took that panel data, and I also tried to corroborate it with a primary survey. That primary survey was again for almost 100 lending officers of different banks that I took. So I took a survey from all these banks, and it was a very extensive questionnaire that I had designed to understand the challenges they were facing uh, for lending to the priority sector areas. So what came across as the biggest challenge was the HR policy and the HR framework in banks. So what we call a fear psychosis or an inertia for lending in public sector banks, because somewhere the structure is so designed that it does not incentivize risk-based lending. At the same time, the penalty for lending to riskier areas is very, very high. In case there is a default, is very high. So, for instance, if sorry. So, for instance, if they lend out and there is a default, then if they lend out and there's a default, then somewhere there, the promotions will get stopped, or their seniority will be impacted, or their performance linked incentives will get reduced. But at the same time, if they perform well on lending to priority sector areas, there is no incentive as such given that, okay, you did very well there. So then, public sector banks, lending officers become a little reluctant to kind of, why should they lend out kind of a thing, is the whole thing. Number two is a lot of political interference, which one sees in the public sector banks, because the ownership is primarily with the government. So even so, these are the challenges which came out from the survey. From the secondary data analysis, of course, I got some nice, cute results on like okay, it's the smaller banks which are lending more, or it is the private sector which is lending more. It is not the public sector which is lending. And so those kind of things in terms of size of banks, nature of ownership, and the more profitable banks, or some other features that I took of the banks to understand what kind of banks were lending more and what kind were lending less. When I try to substantiate that with the primary survey, and understand the real reasons behind, the qualitative reasons as to what the figures were telling me as to, let's say if public sector is lending less or private is lending more, then when I get deeper into that, understanding of the qualitative comments in the questionnaire, in the survey, then it's very interestingly revealed that private sector has found a way to make priority sector lending also a commercially viable proposition. So just like in the nature of private sector, where they're accountable for the results, where profit is the key. So even though this is a social kind of lending and they are supposed to do it, they're mandated to do it by the RBI, they have found a way to make that also profitable. So by ensuring that uh, the HR policies are well aligned to generating profit on that sector. So for instance, they will hire the local talent, you know and they will make them responsible for priority sector in that area, so that the local person, well versed with the culture, with the people, with how things work in that area, is able to kind of lend out better, ensure the recovery is better, and make it a profit center. Unlike a public sector bank, where there's a policy of rotation and transfer every 3 years, people will get transferred. So a guy from the south may be posted to the north, and then he doesn't understand the culture of that place, and he's away from the family into an unknown territory, has no incentive, just to pass time and then come back. Some of those policies were really killing the spirit. And Number two, of course, like I said, political intervention or interference came out to be a big factor in that primary survey, where people said that because the ownership of public sector banks is with the government, there's a huge interference in lending decisions. I think some of that we have also seen in the current times with Kingfisher and other such companies, Nirav Modi or the others that we see have just defaulted on their loans, taken big time loans from these big public sector banks, and they have defaulted, plain and simple. So I think those were two big factors which came up as challenges. Then, of course, there were other challenges like, they felt that there needs to be a proper training on this, because this is a different kind of lending than a regular lending. And so risk assessment and collaterals ensuring, or administrative formalities, or other things which need to be done are some of the bottlenecks to that kind of lending. So I think that's what uh, basically I think it also boils down to the accountability by the public sector banks, and how much performance appraisal system, the way it is designed in those public sector banks, where uh, there is no really incentive given to you for lending high on priority sector, but the penalty is high in case your lending decision goes bad and leads to a bad debt default. So then, of course, there's no incentive on people to lend out more. So I think those were some of the interesting challenges that I came across to these kinds of lending. And of course, the state wise, I talked about there also. And the third question here is why certain people who are leaders have the opinion that giving direct cash to farmers is bad. Okay. Yeah, so I mean, direct cash to farmers, when you say, I am not sure what really you mean by that, because priority sector lending is like giving loans to the farmers, and half the time these loans are waived off, as we have seen, every government which comes wants to get the vote banks, and this is the largest vote bank of the country, and they try to please them by having loan waivers, and so the farmers don't have to prepay the loan, and then it's like a direct cash transfer. But my point is that you know this, I think, really spoils the credit culture of that sector, and again makes it more difficult for banks to lend further, because banks know that if the government is going to anyway waive off, what is the incentive for them to lend, because they're not running a charity here, right? It impacts their profitability. Number two, the farmers also become very complacent. They know that they don't have to repay, so that's really spoils the credit discipline and the credit culture in the economy, which is, I think, not in the larger interest of the economy. Uh, and most of the times, the borrowers, as I had found out, were in that farmer segment, were also the richer section of that farmer. It's not the poor farmers where anyway the loans are going. Majority of the priority sector loans were going to the richer farmers only, even within agriculture. So if you're doing the loan waivers, we are actually not benefiting the poorer section there at all. Instead, we've spoiled the credit discipline. We've made it more difficult for the banks, and then the whole thing comes as a burden on the fiscal policy of the government, because government has to ultimately then subsidize the banks and make good the loss to them, and then who bears the brunt of that fiscal burden? You and I, people who are paying taxes, as it is, we have seen. It's the middle class, is the salaried income, which is paying highest on taxes, nobody else. So then ultimately, who's bearing the brunt of all that? And it's not that we are benefiting the farmers, it's not that we are helping to boost their productivity or help their per capita incomes. If we were doing that, okay, one doesn't mind, because it's all in the larger interest of the society or the nation. But then ultimately, somewhere, like they say, it's better to teach a person to fish than to give him the fish on a platter, right? So the idea is to empower the farmers to produce more, to be able to produce with better quality, with better technology. So give them that wherewithal, enable them, give them those machines required, the seeds required, the fertilizers required, those ensure that the policies are so friendly, the minimum support prices that we talk about, you know, all those, that entire framework is so supportive to the farmers that it encourages them to produce more, earn more, rather than just subsidize them and give them plain simple cash. And then where is that cash going? Is it going only for their consumption, luxury management, because that extra cash is there, or is it going to help them create more livelihood and do better in what they're doing? So I think that is a more sustainable solution, where you empower farmers through giving them better lending, better technology, make it more accessible to them, ensure that the farming quality is improved by them, rather than just plain simple uh, just direct cash transfer, because we don't know the end use of that cash, where it is going for, right? So ultimately somebody has to be accountable for that cash which is going. Economy cannot run in charity, because if it is going to someone's section, somebody else is also paying for it, right? And the one who's paying is also people like you and I, the middle class income or the lower class income might be, or salaried person. So it is not like always that the richer section is paying for it. So I think that is where that skepticism comes from, what you're talking about giving direct cash. So it's I think that That fear comes from there, because the idea is to empower people and look at the long term benefit rather than a short term benefit of just giving cash and being done away with your responsibility there. I hope I've answered the three questions to uh, in what you meant to ask me, and I hope I have not digressed from there or kind of given you something that you didn't want. In case there are something, please let me know. Mm, I can't see any more questions here. So if the organizers of the webinar will tell me what to do further, I can go ahead. Or I think if we've had enough discussions on this, then maybe we can end the webinar here. Okay, so I think he has sent me. Has he sent me some more questions today? Okay, let me try and see what more questions are there here. I think one more question. I have seen an advertisement stating. Yes, Tilay?
Hello?
Yes, Tilay?
Hello?
Yes, Tilay, tell me.
Ma'am, there are two more questions.
There are two more questions you've just messaged to me. Okay, I'll just take that. I'll take that. Okay, so just a second, please give me a minute while I read this out. Uh, okay, this question says I've seen an advertisement stating that the government is taking a move to provide a loan for the people, just Aadhaar as a collateral. What would be the outcome if that happens, and who would be benefited? Stating the government is. So, see, a lot of these schemes are in the pipeline. I'm not sure what this scheme is really all about, uh, because I have also cursorily read about it, but I'm not sure if it's still really in place already. Uh, but this is one of the many schemes which government is talking about, especially in the recent budget. They've talked about many moves for the poorer sections or the farming section, rural section of the country, and just providing a loan basis Aadhaar as a collateral, uh, I think would be pretty myopic, because Aadhaar is your, of course, I mean, it gives you a proof, it gives you an identity for what you have. But how can it act as a collateral? I'm not sure, because Aadhaar is available to anybody and everybody who's a citizen of this country, and um, it's based on that portion. It doesn't act as any proof of the income capacity or the loan repayment capacity of the person. Yes, of course, you can access that credit information, credit history of the person through Aadhaar, is what you can do. And then based on that, yes, you have some comfort. The lender may have some comfort that, okay, this is a genuine person with a genuine identity, and maybe some background on what he holes. And of course, I mean, nowadays you require Aadhaar for almost everything and anything. So in case the loan is not repaid, um, then your Aadhaar can be forfeited or can be confiscated, and that can of course result in a lot of problems for the person, because it's like your, UID, unique identification, uh, that we could talk about here. So a lot is at stake if you are giving Aadhaar as your collateral. But then, I mean, this is the picture, of this is on the paper, right? So but actually speaking, till the time we are able to establish some credibility for Aadhaar, I'm not sure how the scheme will work, because Aadhaar itself is into big question mark right now, and many people are raising concerns about the privacy there, about many other things, and government is in two minds what needs to be done about it, whether it can be linked, not linked to your accounts, and how. So I think till those questions are decided, it will be very difficult to use Aadhaar as a collateral, really. So this, I think the scheme will have to hold on to take a view on that till we get to know more about the specifics of that. So that was, I think, the question that I had taken. There's another question from Rakesh. Hello, ma'am. Good evening. How banks are fixing interest rates for lending to particular sectors, and we haven't developed the primary and secondary and gone to tertiary. So how to develop these um, levels? Yeah. So I think the first thing on how banks are fixing interest rates is simply, I think, you have a base rate, you have a prime lending rate, what they call. So there's a whole science of fixing up the interest rates. I'm not sure how much time we have to get into that, but broadly speaking, it is linked to your cost of the funds that you have. The banks, of course, as you know, they are in the business of taking deposits and then lending those deposits. So there's a cost to that they pay to the depositors, whether it is the interest on the FDs or the other accounts that we open with them. And of course, there's a cost of operation of the banks, with their salaries, maintenance, rents, everything that they pay. They have to cover those also. But these are the costs they have to cover. Plus, then obviously there has to be a slight margin they have to make. And then over and above that, it is linked to the risk factor of the lending. So they do a risk. So the whole business rests on risk assessment. So who to lend to and how much to lend, at what rate to lend, will all depend on the kind of risk category the borrower falls in. So if the borrower is a AAA category, which is not risky, which is of the highest safety order, then the interest rate is low. But as the risk goes on increasing, which means that the rating goes on coming down, then your interest rate attached to that will also go up. And of course, somewhere it is linked also to the repo rate and the bank rate and the other rates, which are the benchmark rates in any economy. That means the rate at which RBI will lend to the banks. So that becomes the basis. And then on top of that, you will load on all these other factors and then make an onward lending rate. I hope I've answered that first part of the question for you. And the second part of the question, what you've asked is, and we haven't developed the primary and secondary, gone to tertiary, so how to develop these levels? So that's a very tricky one, because how to develop now when you've already surpassed what you were supposed to do? But I would say better late than never, because jab jago tab savera, as they say. Um, so I think now government has become a little conscious, and in the last budget also, if you notice, they've come up with a lot of SOPs for the agriculture and the manufacturing sector, especially the SME sector. So a lot of attention is going to the SME sector, and they have given a lot of incentive schemes. They are making it very easy for these sectors to borrow money. But I would say money is just one part of it. Like I said, there are many other factors linked to it. Uh, in the farming sector, we talked about the minimum support prices. We talked about the technology access. We talked about the land reforms which have to accompany. We talked about the crop insurance, the insurance which must come along, because there are times when the entire produce goes waste, or is eaten by the insects and fire and other things which happen, and the whole loss happens there. So I think those other support systems are also very, very important. So unless the whole thing comes together, and I only have one submission, that how to do it uh, is a secondary part. The first part is the intention to do it. So when we are all clear on the intention and we are very serious about it, that we have to do it, I think we can find ways to do it. That is the easy part to do. But the question is of the intention. Do we really want to do it? Right? So and that to some extent, to my mind, is linked to politics, corruption, problem of education in the country. If we can educate the masses, they are more aware of their rights. They can think through ways to tide over the challenges they have in their occupation, in their livelihoods, and then find ways, you know. And I would say, cooperative societies are a great way to go forward. So whether it is microfinance or it is cooperative societies, when the community decides that they have to do certain things, and the unity is strength, as they say, when they come together. And I've seen this in many parts of the country, especially Sidbari, where we go every year in this college. The kind of community development which has happened in that area in the last 20 years is phenomenal. And it's purely because the entire community decided to come together, and they decided no more of this, living in poverty, or lack of hygiene, or problem of alcoholism, you know, or other disability problem with the children. So they decided that, they will do something about it. So they gathered together, they formed a movement, they supported each other, and that has just taken the society there leaps and bounds there. So I would say, one, the political system has to be more accountable, has to be more conscious, has to be more goal oriented, to ensure that come what may, they're not going to succumb to any pressures of any or any lobbying of the richer section, and they are going to pass on the benefits to the poorer sections. It's like they have to make it a KRA for themselves. Um, so the intention is very important, is something that I would say, of the top leadership, because ultimately it all flows from the top leadership, whether it's a company or the country. If your top leadership is not aligned, or is not in sync with that idea, no amount of efforts will work. And so that's where it comes from, I think, the primary and the tertiary sector. um, and secondly, the education is very important of the masses. Even today, we notice that majority of the country does not even have access to primary education. So if people are not educated, uh, they will not be well versed. They will not have the confidence to grow. They will not be able to find the ways and means to grow out of their challenges. So again, a push and pull strategy is what I call is required in any situation. A push from the masses to ensure, and pull from the governments to allow them to do that. I hope I made it clear, and maybe people like you and I mean, I would say the young generation has a lot to do with this. So, I mean, why is it that we find e-commerce models in everything else? We find it for your Mintra, we find it for online shopping, Amazon, everything. Why don't we find websites? Why don't we find e-commerce models, which brings these farmers and the buyers together? So it's like sellers and buyers together. So why is it that the farmer is less left to be exploited by the middlemen or the mandis there, and he gets 2 rupees a kg for his produce, while it is sold at 20 rupees in the market, and obviously the balance 18 rupees is cornered by the middlemen there. So I mean, if we can put the farmer in direct touch with the buyers, we avoid the problems of transportation, we take care of the problems of warehousing and such logistical issues there, through online channels, through the technology models that we are evolving in the country today in every marketplace. So why is that model not reaching the farmers? Why is that model not reaching the SMEs? Right? So if we are able to bring that platform to those areas also, just imagine the kind of benefit they can reap from all this direct connection, which is currently being enjoyed by the uh, Flipkarts and the Amazons of the world. So why can't we bring the same platform? Why can't the young generation like you all take the ownership of, take the mantle of doing this forward? So I think a lot of things there which can be worked on. Uh, I don't know if I'm exceeding the time because it's a topic I'm very passionate about. And I'm glad the questions are coming in. The questions are very interesting, very thought provoking. So I think I'm also thinking aloud with you all. So it's just kind of making me also pretty much interested in the whole conversation here. Mm, okay, so we've talked about, and okay, then I think this is one last question here, is it? Correct. Do you think private lenders have taken over the market of public banks by sanctioning the loan with minimal and easy paperwork? Uh, do you mean the market for priority sector lending to the smaller sections, or in general the market? I'm assuming you're talking about a general market, right? I think the topic here was social lending. I'm not sure if you're talking in that context or in the general context, but I'll take both maybe. Uh, so you're saying, let's take the general market of public sector banks by sanctioning loans with minimal and easy paperwork. I'm not sure if they've taken over the market entirely, because the percentage of public sector banks, their market share is still very low compared to the public. So public sector banks are still having almost 75 to 80% market share in terms of the number of branches, in terms of the employees, in terms of the amount of the asset base they have, and the amount of loans they are making. So in all these parameters, they have the majority of the share in the country, right? I'm not sure if we can say that the private sector has taken over, because it's still predominantly public sector market of banks in India, dominated by the public sector banks. But yes, private sector, like I said earlier, also is by its inherent nature of formation more efficient in its operation, because the accountability is large, the sustainability is in question, which to some extent in public sector is not there, because they know that, like what is happening in the recent times with an NPAs as huge as 8%, 10%, year after year, they don't bother, because they know that government will come and recapitalize the banks. I mean, they lose money, the general public money. So where is the accountability? I mean, if they are they were made to suffer for those losses, for those bad debts, if the person who was responsible year after year for these bad losses, and was made accountable, or the structure was made responsible, the system was made responsible, then I'm sure they cannot, they would not have also afforded to do this in the long term. But they know that they have a big daddy sitting behind, RBI or the government, which will easily recapitalize and send more capital. MPAs hai, thoda bahut hilla hoga, and then they will send the capital. So, I mean, then how does this lead to any kind of ownership and accountability and improvement? So, I would say public sector model, by its very inherent nature, is more efficient, uh, and therefore if it gives out loans with less of paperwork, with minimum hassles, it is mainly with their intention to be more customer friendly, right? That is the nature they have, and to make more profits. They are more profit oriented for sure, right? And that's important, for in fact, for any company to be profit oriented and make profits, because otherwise sustainability will be a question. The business model has to be sustainable, has to survive. If you don't make profits, you can't survive, right? You'll have to shut down, and that's not again in the interest of the market or the employees or the whole structure. So therefore I would say that private sector is more efficient in that sense, and but yes, they're more expensive also. So if you notice that the interest rates which the private sector charges is a little higher than the public sector banks also. So there is a cost attached to that. So it just gets set off the efficiency part. So some of us who may be more conscious of the cost may still like to go to a public sector bank and may probably wait a little bit more and go through a little bit more hassle, but we get the advantage of a lower interest rate also there. So to that extent, I won't say private sector has taken over the market, but yes, I think there's a lot to learn from that model in terms of efficiency, which public sector can learn, and I think it is trying to do that. I mean, noticing that these banks are definitely getting more technology savvy, they're getting more customer service oriented, but still a long way to go. The pros and cons to public ownership of banks in the country, as we've just discussed. I think the model worked because initially it worked after our independence because of nationalization and the economy needed the support of the banks. But gradually we're privatizing. I think we will have to move to the private model and ensure that the efficiency part comes in because the economy cannot survive on losses for a long time. Are we good, or are there more questions to this, Tilai? I think I've finished all the questions here. Have I left any? Please let me know in case there are some questions still pending I have not been able to answer. Well, you can always mail me, you can always call me in case you're interested in some more understanding of the topic, some more conversation, some more ideas, some more thoughts. And if you're interested in more research work in the topic, I'll be happy to collaborate with you also. Um, your ideas are always welcome. We're all working towards, you know, strengthening the economy, enhancing our learning on the topic, and ensuring that we all work together. So I'll be happy to collaborate with you. I'll be happy to receive your suggestions and thoughts and ideas on how we can, further refine this area, what we can do more, and ultimately, hopefully, thinkers like you and me, if we can just, present some ideas to the government and to our finance minister, who's incidentally very open also and very receptive to new ideas. I believe she's done crowdsourcing on ideas for the budget and for other things. So government is also getting more innovative and more advanced and more open to learning. So I think if some of these ideas can be presented, I'm sure we all can work and strengthen this area and try and resolve some of the problems, chronic problems of this country, largely the problem of large section of our country still not getting its due, what it should get, especially the farmers in the rural areas. So people who work hard for you and me, you know, they deserve a lot of respect, a lot of due for their hard work. I think we all need to work together for that. So thank you so much. I really enjoyed this conversation with you all, this discussion platform. So thank you and most welcome anytime to approach me and call me and meet me if you should you want to. You're most welcome to Soil School of Inspired Leadership. We operate out of Sector 44, Gurgaon. Um, so we are a B school with 1 year full-time MBA and for people with prior work experience of 2 years at least. Our endeavor is to create inspired leaders, young leaders who can think innovatively, who will have the courage to confront the problems of the society or the country and help to contribute to resolve them. So thank you so much. Have a nice day. Good night. Bye.